Well, everybody, the opportunity to join the Maximus Perpetual contracts is ending in 6 days. Now, what does that mean? Well, if you haven't been paying attention, Maximus contracts are essentially just pooled hex stakes. So the benefit of joining one of these contracts is that you basically get higher bonuses, lower gas fees, and instant market utility if that's what you want. So, long story short, there's power in numbers, and all of us pooling together to make one giant stake will get us more bonuses than we could possibly ever do on our own. So the perpetuals are just that, and also it really cuts down on gas fees as well because you only have to pay one gas fee when the stake is over rather than everybody ending their really expensive stakes at the end of it. And if you haven't watched my previous videos about what Maxi is and what the perpetuals are, make sure you check them out before watching this, but I want to go over my strategy, so stick around till the end because I'm going to tell you what I'm doing to handle this Maximus Perpetuals minting phase. The Perpetuals, as we all know, are base, trio, lucky, and DECI. These are a 1-year, a 3-year, a 7-year, and a 10-year pooled stake. And these become more and more attractive to me the more I think about them. I was initially going to possibly sit some of these out, but now I'm going to go in to every different Perpetual and I'll tell you my allocations. Again, this is just my personal strategy. Don't copy this verbatim if it doesn't make sense to you. I'm just telling you what I'm doing and how I'm thinking about it, but I don't have all the answers, so you need to think for yourself and decide how you're going to participate, if at all. And again, this is totally optional. If you don't want to join a staking pool, again, it's trustless, audited, no admin keys, very, very safe, but it is totally optional. So if you don't want to join this, that's entirely up to you. I really don't care either way. But I know a lot of people might be interested, so let's get into my strategy, right? The team launch requires Maxi to mint team. So Maxi is the current 15-year pooled stake token that's out right now, and you can convert Maxi to team in a 1-for-1 ratio. Guys, look up all the dynamics of this. I'll actually post a couple of useful links from the blog that Goldkey wrote in the description below, so you really need to learn about what these are before watching this video. But when it comes to the team minting phase, I personally think I'm going to be converting either some or all of my Maxi token into team. Now, what ratio? I still haven't decided yet, but I'm going back and forth between some or all. This is actually the only thing I'm not quite sure about. If you want to leave a comment below about what ratio you're going in with of your total Maxi, go ahead and leave a comment. But I definitely want to get involved in team because team is the primary staking coin that will allow you to fully benefit from all the perpetual contracts going forward and really take advantage of those higher, bigger pays better bonuses, as well as, airdrops of Maxi token on years 3, 6, and 9, plus any other cool stuff that the mystery box might or might not give to team stakers in the future. Again, no expectations of profit from the work of others, just a speculative play here. So I'm thinking that I'm going to use a lot of my Maxi, if not all of it, probably most of it, or at least 50% maybe. So somewhere between 50 and 100% of my Maxi will be used to mint team personally. And I'm speculating on this, guys. I'm speculating that there might be a dip after the launch phase. This might not happen. This is not a guarantee. This is why you should not take what I say as gospel, okay? I'm just a person speculating, just like you. I just happen to be on YouTube. But I know that a lot of people might be buying Maxi in order to mint team specifically, and so there might be a little bit of a sell-off after the minting phase is over. There might not be. So again, one of my thoughts was to just mint all of my Maxi, or most of it, into team, and then if Maxi goes down in price, maybe buying some back lower around the 1.5 to 1.6 x premium on Hex. That means like a 50 to 60% premium over Hex. The reason that Maxi is still so attractive to hold is that because unlike all the other perpetuals, it still has a 5x Hedron bonus. So that doesn't apply to all the other perpetuals, which are launching with only a 1x Hedron bonus. So all the Hedron that you can get from Maxi is going to be a lot more. Also, 20% of Maxi is burned when it's all said and done, when all the Maximus is exchanged for team. 50% essentially goes to the mystery box, 20% is burned, and then 30% is used to airdrop to team stakers on years 3, 6, and 9. So that 20% burn is actually going to increase the value of Maxi by making it more scarce. And I think that's a pretty big deal. That's essentially a 20% theoretical price pump in the value of Maxi just for burning 20% of the supply. So if supply and demand works out, that 20% is going to hold the value of Maxi up, in my opinion, pretty significantly. Which is why this dip might not actually happen. Because of that 20% gets burned, this dip is really up in the air for me. And it's anyone's guess, honestly. So some other cool stuff about the team token is that the Hedron deployer burned 1 million Maxi in the past, signifying that they, whoever they are bullish on the Maxi protocol as well. And also, let's not forget about the mystery box. This could be used in the future to reward team stakers and reward Maximus holders. So with the dwindling supply, the potential for future rewards, I want to expose myself to both team and maxi, but I'm also keeping in mind the fact that there might be a dip in the maxi price in hex terms. And really the only thing I care about is the ratio of the pool tokens to hex. So the ratio of Maximus to hex, the ratio of base to hex, trio to hex, etc. I'm really just looking at this in terms of how much premium will these tokens have on top of hex, because in the end what I'm really optimizing for is to get the most bang for my buck in terms of hex, my favorite token, the primary stored value on Ethereum, and soon to be Pulse Chain. I haven't fully thought about what I will be doing with my team. Again, I want those staking rewards, but I also realize that there is speculative play to be made in the price of team itself, because team will be scarce and deflationary. The price of team might shoot up in the next bull market, so it seems pretty low risk to stake 100% of your team right now, considering that these stakes roll on a yearly time frame. I'll most likely stake 100% of my team right now, but in the future, when the bull market comes back, I might be staking a lower proportion of my team, maybe 75 or 50%, because the price of the team token itself might start to skyrocket in the next bull market. For now, it seems pretty safe to me to stake 100% of my team and reap all the rewards. You might as well in the bear market. It's not like I'm selling any coins anyway. So, base. Base is the rolling 1 year stake. I'm only going to go into base with 10% of my total stack. Okay, because it's only a 1 year perpetual pool, we can assume that there's actually going to be the least amount of premium on here, because there's not a lot of uncertainty between now and a year from now, and the gains that are going to be made in a year from now are probably not going to be much more than maybe 10, 15, maybe 20%. So with this stack, I'm actually going to be experimenting with being a liquidity provider. Now, this is not for everybody, and I don't recommend this to everybody, but to me, this is just what I'm doing. You make your own decisions. Obviously, take responsibility for yourself, and don't just blindly follow anyone, okay? Especially anyone on YouTube. But I'm going to experiment with being a liquidity provider because I tried it last time with the Maxi Hex pair, but I only tried it for a week, and I wasn't really able to reap a lot of rewards either way. I also noticed that Maxi was going up significantly, so I wanted to pull my liquidity out because I didn't want to end up with less of the more valuable coin and more of the less valuable coin, which is the risk of impermanent loss that every liquidity provider faces. But I feel like it's pretty low risk with base to be a liquidity provider, because at the end of the day, if I end up with a little more hex and a little less base, or a little more base and a little less hex, because the premiums are probably going to be relatively small because it's only a 1 year stake, I'm fine with taking this risk of impermanent loss personally, but only for the base stake, because the premiums, in my opinion, will not get too out of whack. Again, this is a very advanced move, not for everybody, so take this with a grain of salt, and this is just my thoughts. Now, we go to Trio. I'm going to go into Trio with about 20% of my stack, and I'm going to put 100% of it in the Diamond Hands Club smart contract. For those people that don't know, the Diamond Hands Club contract will be coming out a couple days from now. As far as I gather, the contract has been audited and is being released to the public very soon. Essentially, the Diamond Hands Club completes the perpetuals because it offers one more feature that was really the only Achilles heel of this whole thing. Before the Diamond Hands Club existed, was that you're granted a liquid token that represents your share in the staking pool. But previously to the Diamond Hands Club, there was no way to stake these perpetual tokens, so there was no way to save yourself from yourself. And I know that I need that, okay? I need to be saved from myself because I don't want to risk any kind of paper hand, pleb move, or behavior at all. So I want to be able to stake these tokens, and that to me is a great benefit. I'm not necessarily interested in having instant liquidity for all of these tokens, right? And especially for Trio, I'm going to put 100% in the Diamond Hands Club because 3 years from now is kind of when I expect the next bull market to be either peaking or at least starting to ramp up. So I feel like it's very low risk to go all in on the Diamond Hands Club, and I won't really be utilizing any of that instant liquidity feature that you get with these perpetual contracts. Essentially, when I say instant liquidity, I just mean the ability to dump the token or to sell it on the market earlier than the actual stake length itself. Now for Lucky, I'm going to go into Lucky with 30% of my stack. Do you see the trend here? And for this one, I think I'm going to put 50% into the Diamond Hands Club. The reason I'm going to put 50% in is because if I see the premium on Lucky start to skyrocket, just like it did with Maxi, I might be interested in taking some profit in Hex terms and then swapping some Lucky back into Hex if the premium goes crazy, just like it did with Maxi. Now, as we get into these longer perpetuals, I kind of assume that they might start to behave more and more like Maximus did. So Maximus set kind of a precedent for all the rest of these, but I think part of the reason that the Maximus premium is so high on Maxi token is because there's so much time to be had from now and then 15 years from now. So because of this uncertainty, and I think because people are pricing in a lot of future optimism in Maxi, I think the same thing might start to happen with DECI, especially the 10-year stake, and Lucky. But this optimism and this opportunity for price premiums kind of decreases as you go into these shorter stakes. So it was highest for Maxi. I think it's going to be second highest for DECI, third for Lucky, fourth for Trio, and then fifth for Base. And that leads me to my next point. So for DECI, essentially I'm going into DECI with 40% of my stack and also only putting 50% in the Diamond Hands Club. So only staking 50% of my DECI, again, for the same reason as Lucky. Because these are such long stakes, I feel that if the premium tends to overshoot early, perhaps in the next bull market, I might be interested in taking some off the table and swapping it back into Hex, because there is always the possibility in the next bear market for things to undershoot and go below the fair market value of whatever the staked Hex would be behind the scenes. Does that make sense? So there's the idea of premiums and deficits when compared to the treasury value or the actual Hex backing one of these tokens. So the Hex backing one of these tokens is essentially equal to one Hex plus whatever yield that token has generated by serving its time. But as we saw with Maxi, people tended to way overvalue Maxi's fair value with a very high premium. Again, part of this was probably due to team being right around the corner, and we'll see what happens afterwards. If there's a dump, there might not be at all, because again, the 20% burning and all the good stuff around the corner with the team staking. But I do think it's a possibility in the future that there could be a price deficit, or essentially the price could undershoot the fair treasury value of one of these perpetuals, especially in, let's say, the next bear market. This might actually happen, which is why I only want to stake 50% in the Diamond Hands Club for Lucky and DECI, whereas I feel confident staking 100% in the Diamond Hands Club for Trio, just because, I mean, that's probably going to be a very bullish time of the year, in my humble opinion. So take all this with a grain of salt. I'm only speculating just like you guys, right? And again, my closing thoughts are this. Keep in mind what you're optimizing for. Me personally, I want more Hex. That's my end goal of all of this. I always just want more Hex. It's my favorite asset. I think it's going to be the highest performing in the long term. And again, I would consider swapping some of these perpetuals for Hex if I think that their premium is overshooting too high and too fast, especially on Lucky and DECI, and even Maxi too. Sometimes I start to think that, oh, what if these premiums are going way too high? Maybe they're not. Maybe people really just value these things very highly. Maybe it's filtering out the strong hardcore believers. Maybe these perpetuals, what it's doing is attracting only the long-term minded people. And so that's why a lot of people are buying these perpetuals and not selling. That's one theory, but that's not to say that there could never be a sell-off and there could never be a deficit. Just because there hasn't really been a deficit with Maxi yet, doesn't mean there can't be in the future. And it doesn't mean that it's going to be the same for all of these perpetual contracts as well. So that's my tentative plan for now. 10% base, 20% Trio, 30% Lucky, 40% DECI. Half my DECI and half my Lucky staked in the Diamond Hands Club. All of my Trio staked in the Diamond Hands Club. And like I mentioned, all of my base experimenting with being a liquidity provider there. So let me know what you think. Let me know your strategy. Obviously, I don't recommend just copying me verbatim. Think for yourself and let me know in the comments below what you're going to do.